Hey, hi everyone. Welcome to another video. So today we are going to discuss about George Soros hedge fund. This is a part of our hedge fund series. So, and the famous London currency bet he has placed, and how his fund is performing, the major milestones the fund has, the strategy the firm deploys, and the challenges faced by the firm, and his professional background and education details. Okay. So George Soros is very famous for his currency bet, the 1992. Okay, he's born in August 12, 1930, in Budapest, Hungary, and education is after surviving the Nazi occupation during World War II. Soros moved to London in 1947. He enrolled at the London School of Economics, studying under the philosopher Karl Popper, and Soros earned a Bachelor of Science in Philosophy in 1951 and a Master of Science in Philosophy in 1954. Early career his after his post graduation from London School of Economics, Soros began his financial career in London, and then he relocated to New York City in 1956. Then he worked at various investment firms, honing his skills in arbitrage and trading. Soros Fund Management and Quantum Fund. So this is formed in 1970. George Soros established this Soros Fund Management in New York City. Quantum Fund is the flagship hedge fund, and it became renowned for its aggressive and successful investment strategies. Performances over 4 decades, the fund reportedly achieved an annual return of 20%, making it one of the most profitable hedge funds in history. And transition in 2011, Soros Fund Management transitioned from a hedge fund to a family office, focusing solely on managing the Soros family's wealth. And yeah, coming to the 1992 British pound bet, which is black, also called Black Wednesday. So in the 1990s, UK was a part of the European exchange rate mechanism, and it was aiming to maintain its currency within a fixed range. Uh, ex- Rate band. Okay. However, due to economic pressures, made this peg unsustainable. And Soros' strategy was he anticipated a devaluation of the pound, and his quantum fund amassed a significant short position against this British pound, reportedly exceeding 10 billion. He was not the only one who took this short position. Many traders have taken this short position. uh, okay, but he became famous. Okay, outcome is on September 16, 1992, known as Black Wednesday, the UK government withdrew the pound from the European exchange rate mechanism, leading to its sharp devaluation. And Soros Fund profited approximately 1 billion from this move, earning him the moniker "the man who broke the Bank of England." Challenges faced by Soros Fund Management are, the firm in 1981 faced a loss and experienced 22.9% decline due to unsuccessful bond investments. In 1998, Russian financial crisis also, Soros Fund Management lost nearly 2 billion, highlighting the risks with the emerging markets. And during the 2000 tech bubble, also investment in technology stocks led to significant losses, reducing the fund's asset from 10 billion to 4 billion. And this period also saw the resignation of key figures, including Stanley Druckenmiller. His investment philosophy is reflexivity. So Soros introduced the theory of reflexivity, suggesting that market participants' biases and actions can basically influence the market fundamentals, leading to feedback loops. Application is the philosophy underpinned many of his investment decisions, and emphasizing the importance of market psychology and the potential for self-reinforcing trends. He's also a philanthropist, and he has contributed to the society also. He founded the Open Society Foundation, aiming to promote democracy, human rights, and open societies globally. And he contributed billions of dollars to various causes, including education, public health, and civil society initiatives. So this is about Soros Fund and his hedge fund, and his famous currency bet, his education background and profile. So coming to details about this the currency bet, if we see, so Britain initially joined this European exchange rate ERM, and when it was created, and to keep its monetary policy independent and flexible. Okay, and however in 1990, so no, Britain initially declined to join the ERM when it was created. preferring to keep its monetary policy independent and flexible. However, in 1990, under the leadership of Margaret Thatcher, UK decided to join ERM as a part of its commitment to European integration process. What Britain hoped is by joining the ERM, it would benefit from lower interest rate, lower inflation, and stronger currency. Okay, but the decision to join ERM was not without problems. First of all, it joined with high exchange rate of 2.95 German marks per pound, which made its exports less competitive and hurt its economic growth. Okay. Second thing is Britain's economy was relatively weaker and its inflation rate was higher than Germany's, which meant that it had to keep its interest rates high to maintain its exchange rate. Okay, the third thing is Britain and Eurozone faced external shocks from Germany's reunification in 1990, which increased Germany's inflation and interest rates and put upward pressure on the mark. Okay, so fourth is Britain was facing political uncertainty from the ratification of Maastricht Treaty, which aimed to yeah Maastricht Treaty, which aimed to create a monetary union and single currency in Europe. Okay, so Britain entered this ERM with hopes of keeping its currency above 2.7 to 1, but this was practically unfeasible because of all these four reasons. Political uncertainty from Maastricht Treaty, external shocks of Germany's reunification, and Britain's economy was weaker and inflation was high. And okay, so these were the main reasons. Yeah, due to these reasons, what happened is maintaining this fixed rate band and peg to the German mark was became practically unfeasible, and um there was also problems compounded by speculators like George Soros fund and a lot of other funds. They have compounded this problem basically by shorting the pound, and they were scrutinizing this the ERM and the inclusion of the pound within it, and questioning how long these fixed exchange rates could fight natural market forces. Bank of England hiked its interest rates, to counter this, to attract more investors to buy the pound. But however, speculators such as George Soros began to heavily short the currency, arguing that this monetary intervention was artificial and unsustainable. Yeah, and eventually, basically, not only Soros was the person, Soros was critical of this Bank of England's action, but he wasn't alone in betting against the pound. Although he began betting against the pound quietly at first, accumulating a 1 billion position, he soon became more outspoken. Many other speculators and investors saw that Britain's position in the ERM was unsustainable and that it would eventually have to devalue its currency, or leave the system altogether. And Soros was just an aggressive and influential speculator. He took a huge short position against this pound, and eventually they made $1 billion out of it. Yeah, so the British government tried to stabilize their currency by raising interest rates and buying back pounds from the market. They announced that they would raise their interest rates from 12 to 10, and then began to again to 15 to attract investors to buy pounds and support their exchange rate. They also spent billions of pounds from foreign exchange reserves to buy back pounds from speculators like Soros. However, these measures weren't enough to counteract the massive selling pressure from Soros and other shorts. So, and however, the market also did not believe that Britain could sustain such high interest rates for long without damaging its domestic economy. And Britain's foreign exchange reserves were also limited and were running out fast. Okay. And behind the scene, Germany was also trying to help keep the pound in the ERM, but German officials made public statements that realignment within the ERM must be possible in mid September. Okay, and Soros decided to increase the size of his bet massively, to 10 billion. Okay, as a result of that, the pound plunged in value by 15% against the market and 25% against the dollar. And Soros made $1 billion as a profit from this particular bet. So that's it today, guys, on George Soros and his hedge fund and how his famous currency bet. Okay, thanks everyone for joining the call. Have a nice day. Bye.